Delta in finance means the difference. And at Delta Wealth Advisors, us thinking differently starts at the beginning. We're very focused on taxes and being tax aware, it affects how we look at investments as well. So before we think about how we look at taxes and how we look at investments, let's first look at the raw data. If we start with a study done by the Federal Reserve, we can see how households across the United States are invested. Coming here on the left-hand side, middle income, so a net worth of $500,000 and below, you'll see two things that really pop off the page. First is that primary residence is around 60% of the net worth. And then up here, stocks and bonds, that's ballpark around another 40%, okay? We fast forward all the way to the ultra rich, so 10 million and above. It's basically inverted. Principal residence, your primary residence, is now less than 10%. Stocks and bonds, still around that 40% number here, but business equity and other real estate, so income producing real estate, is now about half of the net worth. So with that in mind, our approach is that business owners and all investors should not be limited to just stocks and bonds as most financial advisors are going to advise upon. Instead, what we want to look to do is we want to look to advise on the entire net worth. By advising on the entire net worth, we start here in cash and we move our way up all the way up to small business interests. So what we mean by that specifically is on cash, we never want to violate this cash bucket. And the reason why that is because we need cash for needs and wants today. So if we don't have cash, we actually have to pull from different buckets and put that money in here into that cash bucket. So by looking at that information from the Federal Reserve, that's built the way that we approach investing at Delta Wealth Advisors. We start with cash. The reason why we start with cash is because, look, cash is king. We need cash on hand in order to live the life we want to live today. It also helps us prevent from having to sell these other buckets, small businesses, private real estate, stocks and bonds, in order to fund cash. Traditionally, that happens at inopportune times and prices. The next level that we move to is stocks and bonds. And the reason why stocks and bonds make so much sense is specifically because of their tax advantages with IRAs and 401ks. If you think about it, with both an IRA and a 401k, we're able to do either on a Roth basis, we'd be paying the taxes today, or on a pre-tax basis, we're deferring the taxes out into the future. And we're able to have compounding growth over many years. We don't touch that money until we're 59 and a half. But the downside is the fact that we do have these panics and manias that occur. Look, we know that we've lost, in 2025, we lost around 20% of money in the stock market in about 20 days. Back in COVID, we lost about 30% of the stock market in 30 days. So these severe pullbacks are not a bug, they are a feature of investing in stocks. And for that reason, many of our clients, when that net worth grows above the $2 million mark, it extends now into our investments in private real estate and small businesses. The reason why private real estate makes so much sense is on twofold. One, there are beautiful tax advantages with real estate, especially with the 2025 OBA tax bill. It's really compounded those tax advantages. We'll talk about those in further videos. That's part one. The second one is the fact that for people who are looking to have cash flow today, you can increase it with real estate. And the reason why that is we're accepting the illiquidity. Again, think about it. With stocks and bonds, this is liquid. You can sell it at any point in time and wire the money out. It's there in 2 days. But with real estate, it is illiquid. That money is locked up in a box, and it only becomes liquid when you sell it. So if you accept that illiquidity, the trade-off is you're saying, I'm willing to make a part of my money illiquid, and in return, I'm increasing my cash flow that I'm going to get from that investment. The final layer, again, if we looked at that net worth, remember 50% was here in these top two buckets. The final layer here is on small business interests. And on small business interests, we're looking to hit an absolute home run. We want to just knock it out of the park, hit 100 out of 100. But on the downside is, and anybody who knows a business knows that there's a high risk of losing your money within that bucket, within small businesses. So if we zoom out and on big picture, how we think about investing for individuals is, we don't think that someone should be only invested in cash or stocks and bonds or private real estate or small businesses. Instead, we believe that it's a combination of all four of these buckets. And when you put them together, it builds a really well-diversified net worth that grows your net worth over time, can generate income, saves you on taxes, and keeps you balanced in all environments. Thank you so much.